Hi, everyone. Mark Lichtenfeld, Chief Income Strategist with the Oxford Club. Welcome to State of the Market. A lot of people have been hearing about and asking me about ESG investing, and ESG stands for Environmental, Social, and Governance. Now, ESG investing is also known as socially responsible investing, and it focuses on companies that implement policies that take environmental issues into consideration, and also how their business impacts their communities and employees, and also diversity among their executives and board members. Now, before you start thinking these are damn hippies singing Kumbaya in the boardroom, that is hardly the case. For example, some of the top companies rated from an ESG standpoint are NextEra Energy, Microsoft, and Salesforce.com. Giant, extremely profitable businesses that have handsomely rewarded their shareholders over the long term. And it's not like NextEra CEO Jim Robo sits around making homemade granola and smells like patchouli oil. I mean, I don't know what he smells like, and I don't know what his hobbies are either. But my guess is he and the other CEOs do this because ESG investing is good for business. Companies that are conscientious about the environment are less likely to have big spills or leaks, or likely to pay big fines for running afoul of regulations. They're more likely to have technology that saves money over the long term. These are participants in their communities, so they're more likely to enjoy goodwill and customer loyalty, and importantly, lower employee turnover. And businesses with diverse boards and executive suites gain different perspectives than when it's all people with similar backgrounds. And this is increasingly important as the US population becomes more diverse. Now, for those of you thinking this is much ado about nothing, or this all seems nice, but I invest to make money, not to make some tree hugger happy, keep in mind there is tons and tons of data that ESG investing works. A study conducted by Morningstar showed that the majority of ESG funds outperformed their non-ESG competitors over 10-year periods. And in large US blended equity funds, more than 80% of ESG funds outperformed. Near-term results, particularly during the COVID crash, were encouraging as well. During the first quarter, 70% of sustainable, actively managed stock mutual funds outperformed funds that did not focus on ESG principles. And get this, index funds did even better. 92% of sustainable index funds beat non-sustainable funds. And companies with the highest percentage of women on their boards beat the Brooks Brothers suit pants off the others, with 53% higher returns on equity, 66% higher return on capital, and their shares appreciated 2.5% more per year. Now, if you're interested in ESG investing, these days many companies discuss ESG on their website or investor relations page, and if they don't, chances are that it's not a priority for them. Most companies also list their top executives and board of directors, so you can see how many execs and board members are women, and sometimes you can tell if they're people of color. More and more people are basing their buying decisions and employment decisions on ESG factors. So it's a good idea to take these elements into consideration when deciding where to invest, even if your only motive is profit. State of the Market is off next week. I hope you have a wonderful Thanksgiving. Stay healthy, and I will see you in December. And for more wealth and income building ideas, please check out my free e-letter, Wealthy Retirement. Just click on the link below. We'll see you soon.